Welcome to this explainer. If you're trying to figure out exactly how millions of Americans build serious wealth and generate reliable monthly income, you are in the exact right place. We're going to unpack the realities of property investment and dive straight into the fundamental strategies that make real estate such an absolute powerhouse of a financial engine. It really begs a fascinating question, right? What if just one single investment could help you build long-term wealth, give you a steady stream of monthly cash flow, and actually grow in value over time? I know it sounds like some kind of financial holy grail, but that combination is exactly why real estate is so incredibly popular. It's multidimensional. But look, before you rush out and buy a property, there's a specific strategic mindset you've absolutely got to adopt first. So here is our roadmap for today. 1. The real estate wealth engine. 2. 4 ways to invest. 3. Are you ready to buy? 4. Avoiding common beginner mistakes. And 5. Tips for smart investing.
Section 1. The real estate wealth engine and how Americans build wealth with property.
At its absolute core, real estate investing demands a pretty massive mindset shift. You're moving from being a consumer of housing to being a provider, an owner of a financial asset. The entire objective here is strictly about generating a measurable financial return. You're no longer looking at a house and thinking, oh, what a great backyard for a barbecue. You're evaluating its mathematical ability to actually produce a sustainable yield for you.
And there are basically 3 distinct engines driving that return. First up is appreciation. That's just the property's actual value going up over time because of market demand. Second is the steady, reliable collection of monthly rental income from your tenants. And third, the eventual lump sum profit you get from a future sale. The real magic of this whole asset class happens when all 3 of these mechanisms are working together at the exact same time to compound your wealth. Moving right along to Section 2, 4 ways to invest. These are the core vehicles for wealth. Let's look at 2 really popular paths. On one hand, traditional rental properties offer you steady monthly cash flow and reliable appreciation over the years. But you're taking on the gritty reality of ongoing maintenance and all the headaches of property management. On the flip side, vacation rentals. Now, these can generate significantly higher income if you're in a tourist hotspot, but that revenue is going to fluctuate wildly with the seasons. That means you need much stricter cash management when things slow down. And then, of course, there's house flipping. You buy a place below market value, you fix it up, and you sell it for a profit. Honestly, it looks so incredibly easy on reality TV, doesn't it? But here's the reality check. Unexpected renovation costs, supply chain delays, or just sudden shifts in the market can completely wipe out your profit margins if you aren't highly experienced and incredibly disciplined. Now, what if you have literally zero interest in fixing toilets or dealing with tenants? Well, that brings us to REITs, or real estate investment trusts. This is where you invest in massive portfolios of real estate directly through the stock market. It's a much lower barrier to entry, it's highly liquid, meaning you can buy and sell instantly, and there is absolutely zero property management for you to deal with. It's pretty brilliant. Okay, Section 3. Are you ready to buy? Let's talk about the financial prerequisites. Here is the very first major hurdle you're going to face. Can you actually afford the down payment? Because unlike buying a primary residence where you might get away with a low down payment program, investment properties usually demand a much more substantial chunk of starting capital. We're talking 20% or more upfront. You've got to take a hard, honest look at your liquid assets before making any moves. Next up, do you have a dedicated emergency fund? Like, can you cover sudden, unexpected repairs? Because let me tell you, the reality of property ownership is that roofs will leak and furnaces will break down, and it usually happens at 2 a.m. on the absolute coldest night of the year. A single broken water heater can throw your entire investment into financial chaos if you haven't built up the proper cash reserves. Finally, have you thoroughly researched the local market? Because real estate is hyper-local. You aren't just buying a building of bricks and wood, you're buying into a specific geographic microeconomy. Understanding the local employment trends, renter demand, and future zoning laws, that is absolutely non-negotiable. Which leads us to Section 4, avoiding common beginner mistakes. Time for a reality check. So many eager beginners fall into traps that are so easily avoidable. They jump in without doing deep neighborhood research, they severely underestimate those inevitable repair costs we just talked about, or they over-leverage themselves with way too much high-interest debt. Add in the expectation of quick, overnight profits and ignoring hidden ongoing expenses like property taxes and insurance, it's literally a recipe for disaster. But listen, with methodical, rigorous planning, every single one of these pitfalls is entirely avoidable.
Section 5. Tips for smart investing. Let's get you equipped for success.
If you want to build a sustainable, profitable portfolio, you've got to start with a strict budget and an intimate, data-driven knowledge of your local market. Don't just take the first financing option you stumble across either. Compare your loans, check those interest rates rigorously to protect your margins, and most importantly, diversify your assets and always, always think long-term. Real estate is a marathon, guys. It's not a sprint.
It all really anchors back to this one profound quote. Real estate can be a powerful way to build wealth, but every investment involves risk, and that's the truth. Doing thorough research, maintaining healthy cash reserves, and having a deep, pragmatic understanding of your underlying costs, that is your absolute best defense in this market.
So, I'm going to leave you with this vital question to ponder. Does real estate actually fit your financial future? Take some time to reflect on your own risk tolerance, revisit the core mechanics we covered today, and just keep building that financial education. Because at the end of the day, your knowledge truly is your greatest asset. Thanks for joining me in this explainer. Keep learning and invest smart.